Rental prices are on their way up again, which is not good news to the majority of people who are renting. We are in some serious crunch for supply of homes. And it's funny when we look at it and we see that prices are going up, it makes us uncomfortable. And now we're seeing some government action that is happening that is actually going to increase the prices even more. So as you know, there is times that we actually are going to buy a property and only put 20% down, sometimes 10, sometimes less, and we might have to pay a CMHC fee, which is a type of mortgage insurance. So if we default on our payment to the bank, the insurance will take over it, and that's why you have to pay for it. It's a very expensive product, and it's usually bundled together with your mortgage. Now, it's important for us to pay attention to this, that these fees are increasing. Now, CMHC, which is the Canadian version of the mortgage insurance, is increasing multi-unit mortgage loans. So this is important for anybody who is planning to build a type of property, and it's important for anybody who is actually renting. So this is going to be taking place in just a couple weeks. As a result of the article says, and this is directly off CMHC's website, as a result of its annual pricing review, Canadian Mortgage and Housing Corp is increasing its mortgage loan insurance premium rates for multi-unit properties. So this is important because if you price it in dollars, you have to understand that the prices should go up over time. That's for sure. But when it comes to the actual percentage, and they look at this in a percentage form, it should never change. It should only change when, if you were wasting money along the way, why are they going to have to raise it? So effective June 19th, premiums will increase by 1.55% for MLI selected properties, either 0.85 or 0.75% for standard rental housing. So this is anybody who is looking to buy a rental house. So listen, a huge part of our channel, a huge part of my clients are looking for properties to rent out. Retirement and supportive housing, student housing, single room occupancy properties. This is a lot of different types of properties. This is the majority of people who are buying real estate as an asset class. Now, a lot of people come back and forth, and there's always this argument between the landlords and they're evil and the tenants and they're evil, or whatever the case may be. But remember, on almost every country that we look at, and I'm talking about the G20 countries, when we look at the G20 countries, it's always about 35% of the population are renters. Now, if we go back decades to the 50s, 60s, whatever it is, now it may fluctuate between 62%, 67%, but it actually doesn't change very much if you look at a 1 to 100 chart. It's pretty even. And so we desperately need landlords to be able to step up to buy those properties to make those rentals available for people. And the reason that prices are going up so much is we can no longer build at an affordable price. Now, this is a step in the wrong direction, right? Where they're increasing those prices. Now, I'm not going to say, first of all, I'm not going to say that CMHC is actually watching my channel, but you guys know that from watching me for the past couple of years, that I'm saying the exact same thing as these guys are saying. And a couple of these really, really jumped out at me. They are expecting weaker economic growth and higher mortgage rates and continuing to slow in the economy in 2023. You guys know that I've been saying that the economy is going to slow for this whole year, and look for Q3. As a result, they expect prices to decline between 2022 and 23, and average prices will not revert to pre-pandemic levels. Okay, so the prices won't go down very far, but the article actually goes on into a little bit more. Look at this. Higher mortgage rates and limited supply make housing less affordable. I mean, a little bit, well, duh, right? But home ownership will be even less affordable than 2023. This is important because though the prices are coming down, interest rates are going up much more. So the prices of those properties are increasing. Now, just between me and you, if we happen to see a builder that's trying to build a home a year ago at 2%, and now his construction loan is coming in at 7%, the guy can no longer make any money. So he's not going to be building, which is why we're seeing record low housing starts, because they can't make any money on it unless they're building luxury units. Well, we don't need those luxury units at 5 million. We need entry-level units that people can afford to buy and live in. Remember, real estate is for people. We need property for just regular working people. So tightening of the rental market, this is on the CMHC webpage still, they're saying affordability challenges in the home ownership market continues to drive up demand for rental units. And we are seeing this like crazy. As we are in this year, we are now seeing 8, 10 different people trying to bid on the same rental unit. They're lining up and they're having to offer in places like Vancouver, Toronto, New York. They're offering $100, $200 over the asking price just to guarantee themselves to get in. So this is a big one that we have to watch out for. Also, regional highlights. It says, we expect more positive housing market conditions in the prairie provinces than other regions. Interprovincial migration and more affordable home ownership are contributing to these market conditions. You guys, we have to talk about that because I've talked many times that inflation does not get rid of money. It just relocates it. Think of it like a bulldozer just pushing the dirt to the other end of the field. This is what's happening, is that those expensive properties in Toronto that are $3 million and those condos that are in Vancouver for $5 million, they're now down 30-40%. But when you look at the bread and butter housing, the 1 and 2 bedroom condos, all of a sudden you see the prices going up on those units. So it's relocating money from the top down to the bottom. But the same happens interstate or interprovincially. This is the same in the United States, where money from the United States in New York, Boston, all the expensive metro markets, also in California, they're getting pushed inland. All that money, think of a bulldozer pushing it inland to where cheaper housing is. Inflation doesn't destroy the money, it just relocates the money. Remember, our money supply is not going places. So we have to know how to use this to our own advantage in order to collect that money. Now, the Financial Post also put out an article just recently, a week ago, saying Canada's home prices have not hit bottom, says CMHC, and their price expected to decline until mid-year. So listen, when people are asking me all the time, should I be buying a property now? Should I be buying a property? Listen, every mortgage broker you talk to and every real estate agent that you talk to, almost except me, you guys know that I'm a real estate broker, it has been telling people buy last spring, buy last summer, buy now, buy now, buy now. Every time you're on TikTok or Instagram or wherever, they're saying now's the best time to buy. But the thing is, how far can you get as a professional if you are screwing your clients long term? I don't understand how that's a good business model. Usually the articles that you see in the paper, they're either going to come from a real estate agent, a mortgage broker, or maybe a real estate association. You don't even have to read much farther because you already know which angle that it's going to slant. Now, CMHC is making money from people purchasing properties. Why would they be saying that prices will continue to fall? Because they too are seeing some problems on the horizon. Remember, if people start defaulting on their mortgages, who has to cover that? It's going to be the mortgage insurance providers. So if they see something on the horizon, maybe we should be a little bit more careful and keep some dry powder ready for some good deals that'll come in the future. I just think everyone should pay attention to that. If you look at people like Warren Buffett, who runs Berkshire Hathaway, he's sitting on 129 billion with a B dollars of cash. He has that dry powder ready to purchase. Now, if we go on, there are different ways that these provinces are looking to deal with this. We can see that Ontario, which is very populous, a lot of people, living in one province, they are raising taxes. We have other people like in Alberta that are lowering taxes. So completely different strategies. So in Alberta, Daniel Smith is running for election for their government, and they want an 8% tax bracket if you're under $60,000. So if you make under $60,000, they want you to pay a lot less money. And even the people who are earning over $60,000, they will generally save about $760 to $1,500 a year. So their goal is to attract more people into their area. Where this one is, Ontario, this is a different governor. We call them provinces, but it's similar to what a state would be. They've raised taxes. Now, this article says Ontario's temporary, in quote, taxes increases may never go away. The article is talking about Milton Friedman. You guys know he is a Nobel Prize winning economist. He is really bang on with how he talks about things. But he had said that there's nothing so permanent as a temporary government program. And Ontario raised the taxes to their top tax bracket significantly over 50%. And they said, oh, it's going to be temporary. And right now, we are now 10 years, and they have no look like they're ever going to go anywhere. So this is where we're going to see continuing on this drama. Now, this is not some drama that's going to go away in a month or two. This channel is not about politics, left or right. That does not matter. We follow the money and we follow business and capitalism and a way for us to make some more money and give a better life to our families. This is always going to change. Every government is going to come and go like the sun and the tides and the moon just come and go. So we have to find ways to work through this. And so, as much as you might be frustrated with one government at one moment, it can change. So we just have to focus on what we can control. So there's going to be different governments come and go, and they're going to have different plans, whether to raise taxes or lower taxes. But one thing that we're seeing universally across Europe, Australia, it doesn't matter. We're seeing local governments running out of cash. Where I am, our city is like $1 billion short just this year. Our provinces and states in the US and Canada are running out of cash. We're seeing countries running out of cash, pensions running out of cash. We're seeing people strapped with inflation. They can barely pay their mortgages. They could barely pay for food and so on and so forth, right? So we're seeing this massive concentration. But then you look at the repo markets and they are just chocker block full with $5 trillion in the States. And in bonds and GICs in Canada, record numbers high. And our companies that are sitting on huge cash hoards ready to buy properties in Canada and the United States when prices are going down. So you have to think to yourself, where are these problems? Identify them for yourself. Do the work, do the homework to read about it, because everybody is going through a problem. Now, this typically is considered a bad thing, a recession. It's not really a bad thing. Even when you're farming, you can't just grow corn forever. You have to have the field rest for a while between seasons. And sometimes they even rotate them where that whole field is not going to be growing for that one season. So this is what I'm saying. When it comes to business cycles, a recession is a good thing to reset the system, and it gives massive opportunities for people to start building their wealth. The matter is up to you to do that work and be prepared. You think Warren Buffett is crazy that he's sitting on $130 billion in cash? No, because the guy's been doing it forever. I mean, he's almost 100 and he's seen this come and go. What is new here is this is MMT, or modern monetary theory. We haven't had this before. This has only been since the great financial crisis. And they've been saying, even Janet Yellen, we will never again see a financial crisis in our lifetimes. I beg to differ. Anyway, I'm wondering what you think, if you think this is going to go below. But even though we're saying that all these costs are going to go up, that means that the cost to build a rental building is going to go up. That means that the cost he's got to rent it to somebody is going to go up. That all sounds like doom and gloom, but there is going to be wonderful opportunities for people. For all these people who have been saving their emergency funds and their opportunity funds and making sure that they had some gold and silver and some cash on the side, we're going to see some opportunities that we haven't seen in 15 years to build wealth. Of course, you can make sure that you're saving and be ready and make sure that you have extra income coming in and so on and so forth. But a lot of it comes down to timing and market timing. Remember, when you think you should be buying, like in 2022, when the market was going crazy in that euphoria, that might be a time for you to step back. And the time where you feel like, man, it is really bad out there, we shouldn't be buying, that might be the time that you have to buy. So just try to think of things inversely, because it's not just the market. There's a lot of it has to do with market psychology. We're going to leave that for another video. Hope you guys have a great night. We'll talk to you soon.